Folks, welcome to another Sunday Night Futures Live. I hope everybody had a great weekend. Happy Columbus Day. The markets will be open tomorrow. I got a little bit scared earlier. I realized it was Columbus Day, and I said, I don't know whether the stock market's open tomorrow. It is open. I confirmed it. So it's good to have you here. Again, hope everybody had a great weekend. What we're going to talk about tonight is what we always talk about. We're going to talk about the futures action this evening. We'll go to that in a moment. What I want to talk about, especially tonight, is something that's coming down the road. And I've been alluding to it for a while now. I'll open it up with the end game, and that is the digital U.S. dollar. I want to talk about in great detail about the who's that are behind the curtain. Meaning, like in the Wizard of Oz, you had that little man behind that curtain that was pulling all the strings. And I have a name for you. We have an organization, and I'm going to share that with you tonight because all these people want you to do is to fight. Whether they used to be at one point in time we were a civilized country. You're a Democrat, you're a Republican, you had a debate. Now it's if you're one afflicted a group and you're being abused, and now you're the victim class, and you get special entitlements. And they want you to fight amongst each other. We're going to talk about that tonight because it does matter to our money. It has a lot to do with our money and what we're going to do with it. We're going to talk about inflation tonight. It's all over the place. The world is on fire. And we're going to talk about why. Why are we seeing all this inflation right now? How do we get there? And who benefited? Not who's benefiting. Who benefited? We're going to go to that in a moment. So let's begin with a couple of hellos. RB, more pressure is mounting on Facebook. Advertisers are moving to Google. That's expected. No doubt about it. I mean, those companies that are advertising on Facebook, they do business with the government. And if you have two parties that are in agreement against your company, you're in big trouble. You're in serious, serious trouble. So Facebook is not a good deal right now to be a part of as a stock. What do we got here? Denny, hey. Buster Stacks, hello. Welcome, everyone. Okay, so let's begin with, first off, the futures action. Get rid of my face. And we'll begin with the equity market. And we have the S&P futures. This is a 4-hour chart. These will all be 4-hour charts unless I say otherwise. The equity futures are up slightly, up fractionally. What you may be seeing here on the E-minis 4-hour time frame again is a flag formation. Now, the S&P 500, the Qs, the Dow Jones were able to have fairly good weeks. The transports had a good week. The small caps, not such a great week. They ultimately closed down on the week. But I think that what we have here is a nice base which is formed nicely. We broke out above resistance. Now we're flagging out. And it looks as though we will probably carry this bias to the upside through to the open tomorrow morning. Well, hello. Joe, yo, Bob, liking the visuals on your new sub. Thank you. My new toy. Good evening, Bob and the contrarians. Tennessee, not bad compared with some states. Very true. Most people are pretty chill. Hope I am not speaking too soon. Glad to be here. Good to have you. No, not at all. Love Tennessee. New 007 Bond movie, not so good. I heard it was kind of woke. Was it woke? I'm giving it 3 out of 5 stars. Not horrible. I like Daniel Craig. I think he's a good Bond. But did they get woke, Larry? All right. Abel. Hello. Okay. So Bitcoin made a higher high. Yeah, Bitcoin's looking really, really good. And I have an article I'm going to go over from, I think it was Morgan Stanley or JP. I think it was Morgan Stanley about Bitcoin. Uh, Bitcoin Q4. Yeah, we'll go over that. Yeah, I think it's going to do good. Okay, so minis up. Let's move on to the Nasdaq. The Nasdaq, were I a bull on the Nasdaq? I'm not. I'm technically a bear. I'm short of it. The chart I'm looking at here appears to be forming up a head and shoulders setup. Left shoulder, head, right shoulder forming, kind of sloppy. Here's your neckline in yellow. And at current, we are down on the session fractionally. I'm not talking my book here. Fractionally. We could easily rally back. The key with the Nasdaq is yields, interest rates. If they continue up higher, which they appear they're going to, big problem for the Nasdaq. Where's my Russell 2000? There we go. Russell 2000 up fractionally. I think overall the E-minis look most bullish, with small caps not looking so good, yet up slightly. And the Qs a little bit sloppy, possible head and shoulders setup. Hey, well, smash the like button. Yes, thank you. Smash the like button, please. So, share with a friend. Tell a family member. If you hate somebody, send me over to them. I'll bore them to death. Again, smash the like button. All right, what do we got? Michael, are they raising the debt ceiling to pay for yet another bailout or what? Yes. In short, yes. Delete Facebook's group, big tech, big pharma, big gov, and especially big defense. All right, we'll go with that. All right. Cool. All right, let's move on. Let's take a look at bond yields. Again, bond yields, I always like to say this, the bond market is the tail that wags the stock market dog. So as goes bond yields, so goes the equity markets. The 10-year treasury note, I should say, not the bond, the note is down. What does that mean? Yields are up. That's why you're seeing the Nasdaq down on the session. Now, I predict that we're entering silly season. What's silly season? Earnings are around the corner. So what does that mean? That means they're going to need to pump the stock market so that they can get everybody excited, get everybody off the silly bench, get them out there buying stocks. The most horrible and most irresponsible thing you could possibly ever do is to tell somebody who will buy a stock that doesn't own it to buy it right in front of earnings. Think about it. You have no cushion. You're not up big. So what? You lose a couple of points if the company misses, disappoints. They're telling people, you watch CNBC, I'd buy the stock before earnings. Why? If it gaps up, it's just going to pull back and fill a gap. Ultimately, why would you buy it before the earnings? It's craziness. I should have taken a pill before I started. I'm going to be on fire tonight. For the new folks out there, you don't own Tesla, you don't own Facebook, especially Facebook. You don't own any stock, don't buy it before earnings. There is a way to trade earnings that we do all the time at the Contrarian Trader. That is, we use a strangle strategy where we sell options. And it's kind of like a neutral type trade, and we try to generate cash flow. Okay, let's move on to gold. Oh, no, let's go to the dollar first. Dollar. So the dollar on a weekly time frame. I went over this with members on the week ahead commentary. Members, it's posted in the members area. I went over how the dollar had broken out the prior week, the week before last week, a doji star formation. What is a doji star formation? It's a sign of indecision. Now, At times, you might say, okay, maybe that means that the bulls aren't that excited. I would agree with that. The problem is that we're in an uptrend, and that last week we pulled back, retested a weekly support level. It held. We bounced off that low. So, jury's out. Biases to the upside. I may be a contrarian. That does not mean that we ignore the trend. So, right now, while we're down in the session and we're a little bit iffy on the dollar, right now, the trend is still up. We tip our hats to the dollar. We pay it respect that it deserves right now. Moving on to other currencies that could influence the dollar. We'll go with the yen first. This is the second largest component of the Dixie basket. The euro being the first largest component versus the US dollar. It is down, becoming oversold. I suspect that we're going to get a rally on the yen sometime this week. Looking on over into the euro, that will probably be up because the dollar is down along with the yen. It is not. I was wrong. I'm surprised that the dollar is down right now with the euro and the yen down. That doesn't make sense. That tells me there are big moves over in the pound, the franc. Then there's not. Oh, it's a New Zealand dollar. Wrong. There's this franc. No, dude, I'm not sure what's going on here. Hold on. I got to go back to the dollar. Something's wrong. I think it's a bad read on the tape. Yeah, this should be up right now. This should be up because we pulled back after hours. You see this dash line here, in gray? That's the final close after hours on Friday. We are opening up right now, but off session highs. That is why there is an anomaly. That being said, I think this chart looks pretty bearish. Good for us. Moving on to back to the 4-hour chart. Moving on to gold. We're going to talk about gold a little bit later in terms of, in fact, I'm going to do an entire series on gold myths that I plan on breaking. Gold futures down. Friday was not a good day for gold. It had every reason in the world to go up on the headline. The problem, and the headline I mean, is the non-farm payrolls on Friday. The problem is that you saw inflation in that data, and that inflation component is what caused this rally to fall apart. I think it's wrong on the part of traders to be reading into an aggressive Federal Reserve. You have a Fed chairman out there right now who's hanging on for dear life for reappointment. For whatever reason, he wants reappointment. I wouldn't want it. If I were him, I'd get out of Dodge like Yellen did, like Bernanke did. I would get out of Dodge quickly because this is all going to come crashing down at some point, and I don't want to be at the helm. Silver. Silver eked out a gain on Friday. It opened up. Now it's reversed off the session. The silver miners, the gold miners had a very strong week last week. Let's take a look at the other commodities. Copper, I have to tell you right now, copper is looking the monster. Let's go to a weekly chart really quick here. I did not go over this with numbers. Now, copper had been in fuego all through the summer. And then what happened is that the Chinese were trying to fight off inflationary pressures. And what the Chinese do is something smart. It's something that we do to a certain extent. They keep a reserve of copper. What did they do? They dumped a lot of it on the market. What did that do to copper prices? It took it down, or took the copper prices down. But what did we see here was not a major pullback. What you're seeing now is a major base from which to break out of. And there you have it. This is a monster. And we will be watching it. Copper looking very, very strong here on a weekly time frame, back to a 4-hour time frame, flat on the session. Here's that weekly upper band of resistance, folks. Once we break out and above this upper band of resistance here at what? Let's just say 4.40 on the December contracts. We're going a lot higher, probably new all-time highs. What else do we have? Let's take a look at agriculture. Agriculture's come a little bit. I think this is short-lived. This is an opportunity to start buying agriculture on these pullbacks. DBA is an ETF you could buy. Corn consolidating in a very tight trading range, down on the session so far. Soybeans, it's been in a downtrend. It's probably going to go lower. This is a pretty bearish chart. Now, here's a chart that should have people waking up. This is by far the most common food staple, especially in Asia, rice. And it is up on the session, but this is not the chart you want to watch. We always like to take a macro view here. I do these commentaries live. I go over a lot of intraday charts, the 4-hour charts. That's just to get a feel for how the markets are opening up. And that's pretty much it. Where we like to spend a lot of time is on the weekly charts. And the weekly charts, just as copper is looking the monster on the metals market, rice is looking the monster in the ag space. And other commodities that are looking very strong in agriculture, cotton, coffee. Now take a look. Take a look at rice on a weekly time frame. And for those folks out there saying, I don't trade rice, I don't trade, what do I care about this stuff? I like technical analysis. Technical analysis applies to anything. If you could chart it, you could use technical analysis on it. If you like cupcakes, chart the price of a cupcake, apply a couple of data points, and you're good to go. All right, so just know to use the monthly charts and the weekly charts first before you're using the daily charts and the intraday charts to plot your trade on cupcakes. So looking at the trade of rough rice, we broke out here the week of September the 6th, pullback and retest number 1, pullback, retest number 2. After 3, I get a little bit nervous. This one's looking pretty good. We retested last week. This is last week, right? Yes, last week. And we closed up higher. I think that we're breaking out. And I think it's going to be a massive, massive move. And I don't think that the Asian community is going to be all that happy about it. Nor should they be. So our alert is set. Take some comments. Talon. Hey, brother. Rio, dividend yield is nice. Okay. Tom Lou. Hey, Tom. You like cupcakes? Me too. That's what, actually, I stole that from. I actually stole it. I love cupcakes too. But I heard Jim Rogers, the famous trader Jim Rogers, who also a big commodity trader. He was teeing off on an interview one time. Poor interview, was just asking honest questions, but he could be a bit of a curmudgeon at times, except if it's a pretty girl. If you got a pretty girl interview with Jim Rogers, he's as sweet as a cupcake. But this poor guy, just ask him an honest question. When do you think gold is going to go up? Whatever the question was. I don't know. You can track cupcakes if you want. And I stole a line from him. I don't care if it's cupcakes. And that's where I got it from. I did not make it up. Hat off and credit to Jim Rogers, the great Jim Rogers. There you go. SPY. We'll talk about SPY. Speaking of cupcakes, how about the SEC? I'm not going there with the SEC. You got too many laws coming down the pike. They're going to go ballistic on Wall Street soon. I read some of the plans that are coming down. It ain't going to be pretty. Your SPACs, dead. Robinhood, these companies that want pay for order flow, they got problems. And you're seeing the people over at Robinhood dump shares as quickly as they can. And for whatever reason, Kathy, what's her name? Kathy Wood over at ARC Funds has been buying up the stock. I don't get it. Okay, let's continue. We're already 22 minutes in. We're going to go to 7 o'clock tonight. VIX. Let's go to a 4-hour chart. Now, odd, the VIX is up, which is strange, unless the S&P is now reversed, because S&P was looking good before. You have the VIX up. If you have we're going to go back to the S&Ps now. If you have the S&P 500 up and you have the VIX up, what that implies is that while, yes, you have traders long the market, they don't trust the rally. They're buying insurance. Let's go to the S&P 500. I should say back to the S&P 500. Okay, so this makes sense. Wow, we took a hit here. This is a 4-hour chart. This is still a bull flag setup. Yes, we are breaching the lower band of support. We're now down a 0.25 percentage point. Only a few minutes ago, the E-minis were up, and now they're down. That doesn't mean we're going to close down below support. So early. This is very, very early, very, very light volume. If we have time, before I log off, before 7 p.m. Eastern Standard Time, I will come back. We'll go back through the major averages to see how we settle out. Okay, so let's move on to events transpiring on the macro view and on the micro view. We'll begin with the micro. First, we got to pay the bills. So, folks, one of our sponsors are the folks over at TrendSpiders. Automate your grunt work, speed up your technical analysis, and improve your accuracy. How do you do that? You use their trade alerts. You use their scanners. Reduce costly analytical mistakes by setting up those alerts. I have a bunch of stocks. I don't know if Franklin's out there. I didn't hear from Franklin tonight. We're going to be going over his GLNG. I think I skipped it the other day. GLG, Tupperware, VRNT. Those are a couple of our watch stocks we're going to be going over. So, folks, we'll be doing a demonstration on TrendSpider. Use our discount code. If you're watching this on YouTube, link below. If you're watching this on Twitter, go to my bio section. There's a link tree thing up there. Click on that link, and you get access to TrendSpider, and it'll take you over to their website, explore the product. They have a demo tour, a lot of tutorials. You're never left on your own. Great support team, and a 7-day free trial offer. If you want to become a member to my service, the Contrarian Trader, I give it away free to silver and gold level members. That's how much I believe in it. They were down at the FinTwit conference. They had a great time down there. Great presentation, great company, great team. TrendSpider. Again, go to our link and use discount code 35CON, TrendSpider. Okay, let's go to valuations. All right, so this is probably the cheapest week that we've gone into the S&P 500 in about a month. RSI. Got to get your head of the charts, Bob. The Schiller PE ratio is it's 37.93. Stocks are on sale. No, they're not on sale. They're just less expensive than they were last week because according to the Buffett indicator, we remain strongly overvalued. Yes, we were at a 2.9 last week. Before that, a 3.1. We're down to a 2.8 standard deviation Bollinger Band beyond the historical trend line. It's still nosebleed territory. Not that that should matter. The Federal Reserve is going to keep on printing money and to keep this party going, because if he doesn't, he's not getting reappointed. Moving on, economic data from last week, actually coming out this week. I'm going to go to last week's in a moment. I keep hearing about this Shiba coin. What the heck is a Shiba? I've seen more about Shiba coin, and I don't know anything about these things. I know XRP. I like XRP. It has usage, fundamental usage that I know about. The big banks like it. That's why the SEC is in there. They want to make it. They want to regulate it so it can be used. Bitcoin, I track it. Ethereum a little bit, but Shiba, I have no idea what the heck that is. Until just now, I've seen Shiba. I didn't know it was a coin. 477% gain. Does it have any value or usage at all? Or is it just a speculative tool? Bob, what do you think about Dollar General? Love Dollar General. Always have. They had to raise prices. We can go over the chart. Once things get hairy and things start to roll over, Dollar General is going to be a beneficiary along with Walmart, those low-end stores. And I'll call it low-end. I go to Dollar General all the time. So there's nothing like paying a buck. Nothing like paying a buck. Now you got to pay a little bit more. DG is a great way to beat inflation, is buying things for $1. Yeah, but they just raised their prices. Now you got to pay like between, it's $1, $1.25, and $1.50, if memory serves, off the top of my head. So, but I think that boosted their stock price because it's gonna help their margins. All right. So Michael, it's like Dogecoin, which I don't even know about. I know about it from what's his name? Elon Musk making fun of it on Saturday Night Live. Not that I watched Saturday Night Live, but I saw the clip. It's part of a dog pound, dog memes. Okay. We have the we're going to go to that in a moment. Jay Trader's right. We have CPI coming out this Wednesday. Very important number, especially for gold traders. William, Kathy Woods is a great example of everyone being right during the greatest bull market in history. Let's see how she does over the next couple of years. I couldn't agree more. She's very eloquent. She seems to be very spiritual. I think she's a nice person. She seems like a nice person, but being nice doesn't make you money all the time. I've seen her make some very, very bad buys. Very, very bad buys. Coinbase, she bought at the highs. I bought at nearly the very lows. Was still in it. I don't understand the value proposition for Robinhood. I don't get it. I think they have a horrible PR issue going on, and they're under SEC investigation. I don't know why you want to get involved with that. It's a commodity-based business. So I don't get it. So if anybody has any opinions of why she likes these companies at these prices, please share them because she's not being proved right in her buys. And I've been calling her out on it for a while. All right, so this week, Columbus Day holiday tomorrow, going to be a very light trading day tomorrow. Happy Columbus Day to all. NFIB small index, that's a good report, an important report for the small caps. That's a sentiment index. Job openings, that's been in the news a lot lately. I guess that's going to catch some headline. This should drop down. If you believe that the Federal Reserve is the Federal Reserve, the federal government is acting in an appropriate fiduciary responsibility to the taxpayer. Job openings should go down. Why? Well, supposedly they stopped benefits for people on unemployment. But I'm hearing reports that there were a bunch of other welfare spending programs that were put in place that I'll call it prevented people from going back to work rather than forcing people back to work. So let's see whether or not the regime is doing the right thing, holding back on these social welfare benefits that they need so badly to keep their base happy. And that number should drop down. If it doesn't, this regime is in a lot of trouble. On the 12th, we also get the median expected 3-year inflation rate. I guess it's going to come out of one of the Fed banks. CPI, as was mentioned earlier, Watch the core number. The Federal Reserve really doesn't use CPI all that much. It's a rigged number anyway. You really ought to take a look at the import-export prices. And I believe we're going to get some of those reports because they come around CPI. Yes, they come out on Friday. So you're going to get on Friday. I'm going to skip Thursday for a second. We'll go back to it. Oh, we're going to get FOMC minutes on Wednesday. Important. Retail sales on Friday. Import price index. Watch this. These are the numbers that the Federal Reserve, Treasury, the government can't manipulate. These are the prices paid. Business inventories. Watch for a rise there. If you get a rise, that's going to put pressure on corporate profits because they're going to have to get rid of a lot of junk sitting around in warehouses. Consumer sentiment. A lot of economic data coming out this week, folks. And of course, on Thursday, weekly initial jobless claims. We saw a big miss last week. The trend is not going in the right direction. Net. You know, people saw a number on, we'll just go to it now. People saw a number on Friday of non-farm payrolls of 194,000. The expectation was 500,000. The prior read, which was revised up, was only 366,000 new jobs. So they revised the number up, yet the subsequent number dropped down. You know, sure, might this number get revised up next month? Yeah, it might also get revised down. So net, if you take a look at initial jobless claims, which are hovering on average at just above 350,000 job losses per month. 52 weeks in a year. Some weeks have more than 4 weeks. You're only gaining right now about 200,000, 300,000 jobs net on the year. Then you back out the initial jobless claims. Guess what? You have negative job growth. Negative. But the regime's their plan, their fiscal plan is working as planned. And I'm only tongue-in-cheek about that because believe me, it's working as planned. Now we're going to get a little bit darker in a couple of minutes. Now, if you're wondering why gold pulled back, I mentioned this earlier. Gold pulled back because you had average hourly earnings, which rose. The expectation was 0.4%. The actual number was 0.6. That's a big beat. I'm happy for people making more money. The problem is that the so-called elites, and I hate when people call these people elites, they're not elites. That's the worst number possible for them. They hate to have to pay more. It kills them. They would rather pay accountants more to get out of paying taxes than to pay their workers more to get more productivity. Moving on. You had the unemployment rate. The unemployment rate, think about this. Think about the insanity. This is the lie. They talk about the big lie. The big lie is the reality of the economic data that they put out. Now, we had a big job miss, right? They expected 500,000 new jobs. The actual read was 194,000 new jobs. Somehow or other, unemployment dropped. You got to scratch your head. What's going on here? What's going on? How is that possible? I'm using logic here. God forbid you use logic with government statistics. You're going to get in trouble. You may get canceled. Back to this report. The participation rate dropped down. What happened is that you have people leaving the workforce. And what happens is they're no longer counted. They're like fairy dust. They are no longer an element on the charts. They don't exist. Therefore, they don't get counted. Why? It's because the government likes to use the U3 report out of the Bureau and Labor of Statistics. This is it here. This is the headline number. This is what they want you to see. This is a fairy tale. This is a joke. The number that you want to use as an intelligent individual investing in a market because you have a sense of responsibility to your family to make appropriate decisions is to use the U6 report, because the story here is completely different. What is the U6 report, also put out by the Bureau of Labor and Statistics? Total unemployed plus all persons marginally attached to the labor force plus total employed part-time for economic reasons as a percentage of the civilian labor force, all persons marginally attached to the workforce. The real unemployment rate, folks, is 8.5%. What was it before COVID? Around 7%. Actually, no, that's bad. November was pre-COVID. Just 6.9%, a six handle. On the U3 number, 3.6. They're dying to get a three handle on the U3 report. So they can come out and say they don't want to talk about this, the big miss on jobs. They want to talk about the number of what the unemployment rate is. That resonates with people. They want to say the numbers back to pre-COVID levels prior to the 2022 midterms. Moving on. Told you this is going to be a heavy night tonight. Okay. This is a chart about the debt to GDP ratio going back to 1900. And you can see that there have been times in the past where we have exceeded GDP. Debt to GDP has gone over 100%. That was 1945 to 46. And at that point in time, the rest of the world was in shatters. We were the global dominant superpower in terms of manufacturing, exports. We had the world's gold in the United States. We had a currency backed by gold, literally backed by gold after the Bretton Woods Agreement. Then this hit. You had the dot-com crisis hit, and then you had 2001, where you had everything that changed. Everything changed. And you saw the debt. It was licensed to print money. The banks, the central banks, they came into power. And ever since, you've seen nothing but a dramatic rise in debt to the point where this is an all-in number, meaning our unfunded mandates, Social Security, welfare, the debt that we've guaranteed, not to mention the debt that we've borrowed. We are so on the hook for so much debt. It's ridiculous. So the question is, how do we get out of this back then and still have a great standard of living? We inflated our way out of the debt, folks. We also grew our way out of the debt. Right? So we had an economy that was booming, and we were exporting goods all across the world. We went from shipping military equipment to now equipment that could help rebuild countries. And this went on and on for decades until the rest of the world was rebuilt. Besides the fact that we were building up for the Cold War, the military spending just kept going and going and going. And as you can see here, the debt just keeps continuing to rise. And as goes the debt, if you take a look at last week's, I went over this on Thursday night, but it's worth, oh, this is the GDP. I'm sorry, this is the wrong report. Let's skip this. I thought this is a different report. All right, so this is just another chart to illustrate where, going all the way back to the stock market crash of 1929, our debt to GDP was 16%. And right before that, it was like zero. You had the Federal Reserve that came in 1913. All of a sudden, we had debt Before that, we had no debt except for the Civil War. And you can see that throughout even World War One. You know, we had debt that grew 119% in 1946. Then here is where things start to get a little bit hairy. Nixon took office, it took us off the gold standard. And then, of course, we just started ratcheting up with war after war, the war internally now on citizens. And we are so far in debt. It is out of control. But with each one of these jumps in debt is a fear, right? You had war on terror. You had the Iraqi war, more Iraqi war, Katrina, bank bailouts, all fear. Your livelihood's going to come to an end if we don't address this. Fear, 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 more and more debt. Rather than don't go to war, let the banks fail, let them rebuild, let the healthy survive, let the healthy pick up the assets, the good assets of the bad banks, and let them go into a bankruptcy procedure. They don't want to do it. So time after time, shut down, more debt you got to incur. We're back at it again, another government shutdown. What is that going to require? Oh, right now the Dems want $5 trillion. They probably end up at about $2.5–3 trillion more debt. The Rhino Republicans will sign on to that as well. Brexit, more debt. Trump tax cuts. Yes. I'm not going to sit here and Trump was an angel. He jacked up more debt. Trade wars, more debt. COVID, of course, that was the Pimp Mac Daddy. That's the icing on the cake to take the world where they want to take it. And this is not a Republican Democrat thing. I'm going to get to a monetary reason why we're talking about this, because I'm sure there are people out there saying, what are we talking about? What does this have to do with the markets? It has everything to do with the markets, everything. Just to show that this is not a Republican Democrat thing, because we need to get away from Republican Democrat, liberal, conservative, straight, not straight, feminist, not feminist. You got to get away from it. That's what they want, because whether it be a Republican or Democrat, they have all contributed to this nightmare equally. Look over at Australia, and this is really why I decided to make this video tonight. What's going on over in Australia is Orwellian, and I'm being kind. I'm going to share this. I would share the InfoWars video, but I guarantee I would get banned immediately if I did. Go over to InfoWars, type in Aussie Casket. Here it is. I'm going to share this video. Watch it at your own leisure. Go to InfoWars, type in Aussie Cossack, and you'll see a bunch of videos pop up. Go check it out when you get a chance. Very, very important. The police state that's going on over in Australia right now is insanity. It's just utter insanity, to the point where you have a guy who posted a photo of a protest 6 months ago, had police come to his door. I'll share this as well. His police came to the door in the middle of the night asking, did you post this photo? What do you care? What are you doing here? Right? And that's basically what the guy says. I'm reluctant to play the video. I'll let you play it at your own time, because YouTube is really nuts lately with censorship. So this is all very coordinated, because what you're seeing over in Australia is unfolding over in France. Lots of protests going on over there over the weekend. Every week, week after week. You don't hear about it in the mainstream media in the United States. Only guys like me, other alternative news sources, they'll talk about it. Not even Fox is talking about it. So France is up in arms about the vaccine passport. Italy, they were attacking police stations, police cars over the weekend. Massive, massive protests over there. We stand with France. We stand with Italy. We stand with the Aussies. And the reason why I bring this up tonight, besides the fact that I just deem it so harmful to business, and to our freedoms, because in the end, the reason why the Chinese need to steal intellectual property is because that the centralized way of governing is to eliminate independent thought. But that independent thought is what provides innovation. And it's the innovation that they don't have, and they need to steal it. And if you try to jam a centralized form of government and you take away independent thought from free peoples, what do you think is going to happen? We're going to stagnate as a people. We're going to go into a decline. And I had people over last night, and I was talking about, and this is blue collar people and white collar people over at my house, and all of them smart. And I'm starting to talk about, side comments. Have you seen what's going on over to Australia? No, what happened in Australia? They have no clue. They're too busy. They're too busy. I do this because it's my job. So you may be thinking, that's over in Europe. It's over in Australia. It means nothing to me. I got to go to work, Bob. Tell me about stocks. Let's get on with this. It's here, folks. It's here. It's in my state. In New York City, you have vaccine passports. I can't go to New York City anymore. I refuse to get a vaccine passport. I'm not doing it. It's none of your business. You don't want my business? Fine, I'll stay home. I don't give a rat's ass. But you're not getting my health information. So you're seeing it in, of course, LA now. You're having people lose their jobs because they don't want to get a vaccine. There's something called the Nuremberg Code, where you're not supposed to force people to get any type of drugs that they don't want without informed consent. But they're doing that. So it's here. It's happening. And you're seeing a petri dish of what's going on and what's coming here over in Australia. How much will they take? So who's pulling the strings here? It's all very coordinated and very, very well done. So if it's all coordinated and it's being executed flawlessly, you got to say, man, you know what? It can't be the governments that are doing this because they're morons. Whatever governments do, they F up. Just as we pulled out of Afghanistan, which I believe was an intentional thing, meaning how poorly we pulled out of it. We shouldn't get out of there. We shouldn't have got out of there the way we did. Whatever government touches, it turns to crap. So how is this being rolled out so efficiently? Well, maybe it takes an engineer. This is an organization called the World Economic Forum. I've always been reluctant to talk about them, but you know what? You got to start talking about this stuff. There's a saying that light is the best disinfectant. And here's the guy. His name is Claus Schwab. He founded the World Economic Forum in 1971. And this guy is the original Bond villain. I'm going to play this for you.
Started writing this book asking myself the crucial question: what is the purpose of a corporation? In the book, I pioneered the stakeholder concept, which was avant-garde at the time, arguing that business should not serve only its shareholders, but all those who have a stake in the destiny of the company, such as employees, society, and the planet. As a consequence, I created the food.
So what he's saying there is that the corporations have an obligation to society, and that's okay. I could buy into that, and corporations do. They contribute to charities, but they do it at their own will. They give back at their own pace to organizations that they've vetted out as being a good organization to donate to. But what have you seen lately? Who's obligated to check your vaccination status? Corporations. So they're being used as an arm of the federal government to enforce federal regulations. YouTube, Google, Facebook. They censor free speech as an arm of the federal government. Now, the problem for Facebook is that you have the Republicans saying what they're doing is too much, and the Democrats saying it's not enough. So it's insanity. It's insanity, but this is a reality. So where have we heard this before? This comment with regard to corporations need to give to. Oh, by the way, they're you may not have heard of the World Economic Forum, but certainly you've heard of Davos. Davos is over in Switzerland. What is their handle on Twitter? The World Economic Forum @Davos. So where have we heard that corporations owe it, or the wealthy owe it to society because they didn't do it themselves?
So I'm going to reduce the deficit in a balanced way. We've already made $1 trillion worth of cuts. We can make another trillion or trillion two. And what we then do is ask for the wealthy to pay a little bit more. And by the way, we've tried that before. A guy named Bill Clinton did it. We created 23 million new jobs, turned the deficit into a surplus, and rich people did just fine. We created a lot of millionaires. And you know, there are a lot of wealthy, successful Americans who agree with me because they want to give something back. They know they didn't. If you've been successful, you didn't get there on your own. You didn't get there on your own. I'm always struck by people who think, well, it must be because I was just so smart. There are a lot of smart people out there. It must be because I worked harder than everybody else. Let me tell you something. There are a whole bunch of hardworking people out there. If you were successful, somebody along the line gave you some help. There was a great teacher somewhere in your life. Somebody helped to create this unbelievable American system that we had that allowed you to thrive. Somebody invested in roads and bridges. If you got a business, that you didn't build that. Somebody else made that happen.
And there you have it, folks. That's entitlement at the government level. So these corporations who pay insane amounts of taxes, which they do, whether it be Social Security taxes, corporate taxes, dividends they pay out to shareholders that are taxed and retaxed over and over again. This is where we're at in terms of a society at current. And these are the people that are pulling the strings. The World Economic Forum and the Barack Obamas of the world, who is probably still the puppet president behind the potato in chief, President Biden. So, you know, they want people to infight here in the United States. They want Republicans to argue with Democrats. They want somebody to put a hate message in this comment box here. They want me to pop it up. They want me to retort and fight amongst them. I'm not going to do it. I'm not taking the bait. I want to make sure everybody pays attention to what's going on in these other countries, Australia, France, Italy, United States here, New York City, and who is responsible? These Bond villains, these archdemons of individuals. These are the people that are responsible. So look no further. For if you're wondering who is orchestrating all of this, look no further than the Klaus Schwabs of the world, the World Economic Forum. Go to their website, World Economic Forum. Go down to the bottom of the page. I'm afraid to link to it on this site. Go down, link to their partners page. Take a look at all the major players that donate. There are different tiers. If you want to be a partner, you got to donate a crap ton of money. And of course, the people that are producing all the vaccines, they're right there. So go over, check it out. This is the Wizard of Oz. And trust me, if enough people are aware that he exists and enough people take to the streets, this guy is going down and going down hard. And the people that have been allowed to walk over our rights, our human rights as individuals, they are going to go straight to effing jail. on a military tribunal where they should be. It's got to be spoken. Because what are we getting for it? You know, you got to wonder, how have they been able to, throughout all of these administrations, how have they been able to, since let's call it 2001, when you had the Patriot Act invoked because of 9/11? How have they been able to finance all this? We don't have a budget to donate to this. There's no central. There's not a bank account that the World Economic Forum can have big enough that could fund all of this. And the billionaires certainly ain't going to give more than they have to. They're going to keep their money, as billionaires tend to do. How did they get it? How did they get the money? We paid for it. We paid for it. Here, this is all of our debt. Going back from here since 2000, we paid for it. Year after year, debt ceiling after debt ceiling. We have financed this. The EU has financed this. If the people over in France are saying, who the heck paid these people to do this to us? You did. They stole the money from the citizen, and they're going to do it again in December, and the Republicans ain't your friend either. If you're a Republican out there, they're not your friend. The Democrats aren't your friend. They want you to pretend there's a two-party system when there's not. They faux fight. There's a uniparty system, and you got to take out these rhinos. The Democrat socialists are doing what they're supposed to do. They are socialists. I don't blame them. They say what they're going to do, and they do it. I respect that. I don't adhere to it. I think it's disgusting and inhumane. I know how this ends. I'm a historian. But the Republicans who facilitate this, you son of a bitches, there's a special place in hell for you. And the Mitt Romneys of the world, the Mitch McConnells of the world, the corrupt sons of bitches that are out there, they're doing this. They're facilitators. We paid for it, folks. And what did we get for it? After all this, here's our GDP. Out of the Atlanta Federal Reserve, our GDP was supposed to be at around 6%. Where'd they start out? Sorry, the forecast was above 7. We were supposed to have, Jesus Christ. We were supposed to have, at the beginning, their first GDP read for all the spending that we've been doing, over 7% GDP growth for Q3. Last week, they ratcheted it down again. It's like every day they ratchet it down to, what is it, 1.3? 1.3% annualized, 1.3% Q3 GDP growth. Here's our debt. This is insanity. This is utter insanity, and it's not going to end well. And if we refuse to push back on this, I'm telling you the end game. I'm going to share with you the end game right here, right now, because these vaccine passports are only the kind of like the second step. First is the conditioning phase. They knock you down. They beat you down. Get vaccinated. Ignore the science. Get vaccinated. Condition you, force you until you just say, I'm going to lose my job. I got to take a vax. They break you down. Then they get you on a vaccine passport. They could track you wherever you go. That's great. But that's not enough. That's not enough. What they really need is this. I've mentioned this before. I didn't want to go full steam potato with this presentation I did tonight, but I haven't even got 7 o'clock. I haven't even gotten to watch stocks, but I'm going to keep going anyway. The war on cash, the end game is here. They want currencies. What does that mean? It basically means you're not going to have a cash society. Their argument is going to be it's going to take the black market and they're going to start paying taxes on all that cash. Sounds good. Will they pay down the debt? No, don't be silly. They're not going to pay down the debt. That's just more money to spend. So what happens if they tap out the black market? Well, they come back at you because they're going to know with the digital dollar exactly what you're spending, where you're spending it. If you're not a good citizen, you know what? Maybe you're not allowed to get alcohol this month or a pack of cigarettes. Or if you got a fine last month, they'll just take the fine fee out of your bank account. And they'll say it's for efficiency's sake. Or what if they need to, rather than borrow to stimulate the economy, they slap an expiration date on your digital money so that if you don't spend it by X date, it expires worthless. I don't make this stuff up. So as we go into a GDP which is falling off of a cliff, inflation is just on a tear. U.S. home heating supplies lowest in decades ahead of winter. I just told my wife, I said, call them up. We just got to fill up. A couple of weeks ago, call them up, tell them I want that filled. I want every 15th of the month, making sure they're back here. Fill it up to the top, fill it up to the top. I'm going to have things of diesel in my garage just in case. I don't want to go here yet. We're here. Here. What are distillates? Distillates, kerosene, jet fuel, diesel, heating oil, industrial gas oil, marine oil. Take a look at the chart, folks. In blue is our current distillate capacity on a weekly time frame. In gray is the 5-year high-low range. Look at where we're at. We are going to have a brutal, brutal winter in terms of energy. This doesn't get made up easily. So inflation on the energy front, the distillate front, is only going higher. Oats. Record highs. I should have gone over oats earlier. I'll go back to it. India faces rolling blackouts along with China as coal shortages forces power plants to adopt emergency measures. Let's take some comments. Wow, a lot of comments. All right, hopefully I'm not seeing any hate, which is good. Bob, you should do an hour of news every few days. Yeah, I won't last long. They're going to ban my ass. Maybe I may open up a new channel, maybe on another platform like what's the other one? Rumble. Vermont has the highest vaccination rate, yet a spike in COVID. You're seeing that in Indonesia. You're seeing it in Israel. I mean, Israel has the highest vax population in the world, the highest vaccination of people with the third jab, yet their infection rate is through the roof. The anti-mask vax state of Florida has seen declining, and two charts look like polar opposites. Yes, it has something to do with seasonality as well, to be fair. But yes, your point's well taken. They were hammering DeSantis, saying that it was like the Darth Vader of people. I love DeSantis. I think he's great, doing a great job. Thinking independently, we need more DeSantises. And moving on, seriously, your candidate about the news is superb. Thank you. All this without a script, Bob. You should think about current affairs analysis, promote the contrarian. Thank you. They will be compensated for $100,000 from NERSA. I'm not sure what that is. Oh, this is regarding DARPA. Okay. Awesome content today. Thank you, Danny. Appreciate that. He's talking about his father who barely knew, who even wrote his first book entitled "Gene's My Father." Awkward. 480 shenanigans. Amen. Hey, 480 shenanigans. Here in Germany, I'm still unmasked, untested, unvaxxed, but this is rare, I'm sure, pal. It's so scary. Get him, Bob. Baba Pops. I love your content, Bob. Thank you so much. You're very welcome. My pleasure. MMT Fund. Yes, Modern Monetary Theory Fund. The world needs Bob. Thanks so much. Consciousness will increase. We have to speak up. Yeah, I was, I've been watching these videos, and the cops just beating the hell out of people over in Australia. I love Aussies. My wife's got family. Like Australia, like a microcosm of the United States. It's a melting pot, which is fine. You have a big Italian community there. My wife is half Italian, and they come over here from time to time. Nice people, nice people. I'm a Crocodile Dundee fan, and to see these cops beating up these people is freaking horrible. Bob is going to need a shower and beer after this one. Yeah, I wish I could have a beer. I'm doing sober October, so I can't. But I would, believe me. Single malt would be nice as well. I had to fill up yesterday. Good. Hey, Pat. Good for you. If you look at the infection rate, then you should look at other aspects as well as the viral load, seriousness, and of course, yeah, you want to, there's so much disinformation. This effing Fauci has got to go. This piece of human waste has got to go. Okay, we saw that one. Okay, all right, so that's the end of the comments. Good. Thanks for the comments, everyone. All right, let's move on here. Okay, so I want to talk about this. I still think that gold is the place to be, because if they roll out the digital dollar as the Chinese did with the digital yuan, look what they're doing over there now. What did China do recently? They banned crypto. So it's all well and good that you had the SEC come out the other day, a couple of administration officials come out saying we have no plans to ban crypto. Okay. What about after you get the digital dollar? Because the last thing they want is competition. Trust me, socialists hate competition. That's the last thing that they want. So if you get the ability to tax people at whim or to limit their spending, control their bank account, well, what are people going to do? They're going to take that money, they're going to throw it into crypto. Safe haven, right? No. Don't be silly. So where would I want to have my money? In gold. And you may be saying, FDR banned the ownership of gold, physical gold. That's very true. He did do that. That doesn't mean you can't bury it, and you can't wait until things change and you still have your wealth preserved for the future. With crypto, all they got to do is shut down your access to the Binance or Coinbase or whatever, wherever you can trade crypto, and you got to make your way down to El Salvador, which will shut them down quick enough. So I'd rather have the rock than a computer screen. Sorry. Maybe somebody could change my mind on that. I would love to have a conversation about it, because I want to have hopium. I want to distribute hopium about crypto. I want to talk about this before we get too far into the night, because I want to go over watch stocks. JP Morgan, institutions are rotating out of gold into Bitcoin. BS on JP Morgan. That is a crock of crap. I'm going to prove it right now. Here's Bitcoin. Here's Bitcoin. And overlaid here is money flow. And it's like at max money flow. You're not getting much higher than this. I mean, the price is going up higher, but this is going to probably flatline out as it did back here. And it does look as though, because somebody asked me earlier about Q3 or Q4 Bitcoin, it's going up higher. It's going up higher. This is a live chart. We already have a new weekly high. We've broken out above prior resistance. We're probably going to take out all-time highs in Q4. Now, when you take a look at gold in terms of money flow, here's money flow here. Money flow is hooking up. Money is rotating into gold. Gold may not be performing as good as Bitcoin, but when you take a look, a few weeks ago, it was August middle of August when we had the where was it? I think it was here. Or was it here? No, it was here. We had the flash crash on gold. And I said, I bet you we're going to get the COT report, the COT report, conviction of traders report coming out on Tuesday. And I bet you're going to see obviously net outflows out of gold. But I'll bet you that the following week, because the report comes out every Tuesday, you're going to see net inflows into gold. Sure enough, that following week you saw net inflows. What does that mean? That means that you have Basel III requirements that does not make it attractive enough anymore to have that much paper gold on your books. They're dumping it. They're dumping it to get out. They need to knock down the price as best as possible, then get net long. That's exactly what the banks have been doing of late. That's why you're not seeing gold rally as much as it should, because you have banks doing stealth accumulation. You had the dollar up last week and the week before, yet gold closed up as well. You had yields up the week before and last week, yet the gold price was up the week before, not up last week. But when you take a look at the gold stocks, they are under stealth accumulation. Look at the price action last week. Again, US dollar up, yields up, gold miners up. Think about it. Money flows going positive. They're hooking up. Still down below 50, but going in the right direction. So don't go buying this line of crap that all money's rotating out of gold and into Bitcoin, because you have gold, which has like $11 trillion market cap, where you still have Bitcoin maybe in the high hundreds of billions, maybe $1 trillion worth of market cap. Do you know what would happen to Bitcoin if you saw 1% come out of gold and into Bitcoin? It would go like this. Unstoppable. So we're not seeing that. Don't buy this propaganda. They want to keep a lid on gold prices until they get a net long position. Then look out above. Okay. Woo! I think we were here to do some charts. So let's do some charts. If you look at the infection rate, we went over that comment. Make sure I went over everybody's Dogecoin. So the Bitcoin, Shiba, I got to look into that. I don't know what the heck that is still, what their usage is. All right, let's take a look at a couple of stocks. These are stocks that we're looking at for the new trading week. And I do have some watch stocks or requests from members. Tupperware. What are we doing here? I think I overloaded the interweb tonight. Oh, I timed out. Okay. All right, so Tupperware. Weekly chart. This is the value of the automated trend lines. Again, folks, if you're not currently a user of TrendSpider, think about it. If you watch this on YouTube, use the link below. If you watch this on Twitter, use that Linktree link above in my bio area and use discount code 35CON and get your 7-day free trial offer. Again, I give it away with silver and gold level members. If you want automated technical analysis, look no further. These lines, which act as support and resistance levels, I did not draw. This is the algorithm. Take them off, put them back on. We broke out last week on Tupperware. High short interest. I went over that with members on the weekend commentary. Members, go check out a more detailed commentary about why Tupperware should go higher on the weekend commentary. We broke out above multiple resistance levels. I want to see if we get a retest here. A little bit of sensitivity. And this is one that I like the story here. because I thought about it. I'm saying, prices are going up. People aren't going out to eat as much because prices are going up. Or they're not vaccinated, they can't go to a restaurant. So if they can't work, if they can't go to a restaurant, prices are going up. Are they going to be so willing to let those leftovers go to waste? Think about it. Tupperware. So Tupperware, I like the story. Let's check out seasonality. Then we'll go to a daily chart. 9 years is a little bit. Let's go to 11 years. Come on. I'm going to go 2010, 12 years. All right. October is an okay month. November is second best month of the year. So we're heading into a seasonally strong period of time for Tupperware. Daily chart. Now on the daily chart, I'm going to overlay weekly support and resistance levels. And you can see we have our alerts set here. In dashed line, those are weekly support levels overlaid on top of a daily chart. Stokes, higher lows. They're now above the 50 mark, looking very bullish. Members, I'll probably be sending out an alert as early as tomorrow on Tupperware. Very bullish. We're looking to get long. VRNT. Weekly chart. All right, so on a weekly chart, again, we have automated trend lines on a weekly time frame in solid, in dash on monthly resistance levels. I love the setup here. We broke out here the week of August the 28th, retest one, failed breakout, retest here, recapture here, off to the races. We're looking for a continuation breakout on VRNT. I want to know if we break out above the 46.17 mark, and more importantly, a close above that mark. I don't care if it trades there intraday. I care about a close, which is why we're not going to use any sensitivity. Breakout, and we're good to go. Now, what if it pulls back? That would be great. I would love to see a retest down here. So we'll create an alert down here too. Touch, bounce. We'll keep a little bit of sensitivity on. There you go. Now, what if we enter, right? And we're trying to decide, where do we get out? Easy, easy, right here. You start, if you're a swing trader, if you're an investor, maybe you don't want to. If you're a swing trader, start setting alerts up at these monthly resistance levels. And you have a weekly one here on solid line. I want to know if it touches, bounces, because this will tell me, hey, I don't have to keep staring at my computer all day long. My phone will light up once we hit resistance, and then I could bail on the trade, take some profits, lighten up, and if necessary, book all profits. VRNT. Come on, Bob. Monthly resistance. I'm typing on an angle. Usually I'm a pretty good typer. Miss Jackson, love you. A high school teacher, typing teacher. Gorgeous. Loved her. My first African-American crush. Monthly resistance here. Book profits. And I'm going to keep this alive for a long time, and we'll allow it to trigger multiple times so we can scale out. So the alert will stay active until the time expires or the number of times it's triggered expires, because this is a rising slightly support level, a resistance level. And so when it hits there, we know maybe you want to book some profits and lighten up. Seasonality. Going back 12 years. October, good month. November, okay month. We dropped down in December. So it's good that we have those alerts set to let us know, get out. Franklin, GLNG. Paul M. Hello, Bob. Very late to your show. I'm surprised. Yeah, man. It's been a long show. It's very, very long. We went over a lot tonight, Paul. Got a little bit passionate tonight, but I had to. Well, thank you very much, Mike. I was on Vega earlier, masterclass on global politics and economics. Thank you. Okay. Check the comments. Chow is lit. Nice. Thanks, guys. Appreciate it very much. Pat, Dats. All right, we'll leave it off with Pat, with Dats. And Michael, great participation tonight. We'll go with Tesla for you. Tesla. And then after that, I think we'll circle back. We'll go back to the futures because it was a little bit wonky earlier. We'll go back and check it out. All right, so GLNG. We spoke about this several weeks ago. And back then, I predicted a rally. I didn't just put this up. Come on, man. There we go. There we go. Better. I pointed out that we had this congestion area here. We had a breakout, a pullback, and a retest. I was looking for a breakout. We got the breakout. Nice swing trade. However, we have now pulled back. And we have broken multiple support levels. I haven't looked at this since I last looked at it back in May. Has it been that long? Wow. We bottomed out, inverted head and shoulders setup. I love the setup here. So here's your setup. It's already broken out technically. So here's your left shoulder, head, right shoulder, and your trend line. Let's put it up here. Actually, we already have it set up here. We broke out, continuation move. Man. Missed the bus on this one. Let's war game this out. We had a spinning top formation last week. I don't think we're getting a new weekly high this week. Let's drill down to a daily chart. I don't know if Franklin is long, so I will point out for Franklin that Michael, you looking at Tesla puts? Michael, are you long the Tesla puts, short the Tesla puts, or are you looking to open up a trade? Okay, so we have a spinning top formation. We have resistance up here. Not up there, right here. And where do we get stopped dead last week? Right there, just shy of 1447. If it breaks out above that mark, if I'm wrong, it breaks out above that mark, you have monthly resistance up here at 1558 per share. So now I like this. I like the stock. I don't think we're going to go straight up from here. Could be wrong. We did see a pullback last week on natural gas, bearish reversal bar on the week. And we saw a bearish price action on Friday. So where do we think that we're going to see a bottom here that's investable? Well, two ways to look at it. One, here. And that's at around 18 bucks a share. This is very, very volatile, this stock. It probably has a tight correlation with natural gas. Again, natural gas had a very bearish week. It got ahead of itself. Now it's pulling back. This note just reminds me that there's another support level down below. I like better and not to get too excited about this alert firing off. The support level I like better is here at around, this is for an extreme pullback. I doubt we're going to get this. $12.07 per share. For that, we would definitely get long at that price point. So GLNG looking good. Let's check out the seasonality. I don't think it's favorable going into the back half of the year. October is favorable, gets less favorable as we proceed into the new year. But in February, it picks back up. But right now, we're kind of in the sweet spot of seasonality on GLNG. So a bit of caution here. Let's move on to Dollar General. As I mentioned earlier, Dollar General is a great store. Love it. Their clientele is at the lesser end of the spectrum in terms of socioeconomics. I do a little bit better. I shop at Dollar General every chance I get. So I'm a big believer in penny saved is a penny earned. And I love this chart. Love it. We pulled back on the month. Granted, it's only the 10th of the month. We have a lot of time to go here, but we did pull back the monthly support. I drew this trend line a while ago. I don't even remember when I drew this, but it was a while ago. And we have pulled back off the highs. I would love to see, you know what? I'm going to overlay this. Like, can I? Yeah, I can. Let's go down to properties. All time frames are set. Let's go to the weekly chart and talk about this. Okay. So you can see the retrace on a weekly chart. Lower highs, lower lows. All of a sudden, we found a support level last week, right? We knew this. And we got a bullish key reversal bar on the week. Love it. Can you nibble here? Yes. Because if this economy goes to hell in a handbasket, as GDP expectations for Q3 imply, Lord knows what they're going to be for Q4. Dollar General, Walmart, those are the names you want to watch. You want to get rid of your Starbucks, all that stuff. You want to go at the low end of the retail base. And you're seeing Dollar General set up nicely here. I would use a stop loss if you bought now, right below last week's lows. Daily, actually, yeah, I can carry that resistance level onto a daily chart. There it is. So I want to see a breakout here. You can see we stalled there on Friday. Good. Down volume on Friday was very light. Good to see. Dollar General looking very, very good. That's whatever that is. Pat's one of our fellow members, and he comes up with some crazy stock sometimes, but I love him. All right. Monthly chart. There's not nothing. Pat, you do this to me all the time. Pat, if you're still watching, is this a SPAC? Weekly chart. I best I could say is that you had a beautiful opportunity here to buy the breakout. Wow, this is volatile, man. Whoa. Very good price action on Friday. Where are my Bollingers? What happened to my Bollinger Bands? Oh, then there's not enough data for the Bollinger Bands here. It's too young of a stock. Okay. So what formed here was a resistance level on this pullback, and we hit it. Let's call it $12 a share on Friday. I wouldn't be a buyer of this stock until it broke out and closed above $12 per share. This is obviously highly speculative. Let's take a look at the intraday chart. Let's go with a 4-hour view. My mouse is acting very wonky right now. Okay. So 4-hour chart, very similar to the daily chart. Wait for your breakout. If you pull back to $9.80 per share, that's a good entry point. If you get a quick snapback, maybe you just want to put out an advanced order, nibble there, and then add more on a breakout. All right, Pat, we'll follow. We'll follow it. You got it, pal. All right, so let me put an alert up here. Pat, I'm going to share this chart with you, okay? All right, we'll keep that active. I would stay very small in that pullback. But then get more aggressive on a breakout above 12. And this is one I would use a trailing stop loss order on. Let the computer take you out. Let the markets take you out. This is way too volatile for me as a human, way too volatile. I have to use a trailing stop loss order. Wouldn't be able to sleep. And we're good to go. Pat, I'm going to share this with you. Okay. That's in the box, Pat. Oh, you're already in. 874, good price. Good for you. Not that I'm surprised. You're very, very good with your buys. Let's take a look at Tesla. All right, Michael. Okay. All right, so you're bullish. You're bullish on Tesla because you're short the puts, or are you using them as a short vehicle? When I use the term short puts, for those people that are not familiar with options, to explain it, it's actually a bullish bet. You're being the banker, you're being the casino, you are selling the options. Whereas if you're long the puts, you are bearish on the stock. So let's just clarify that, so I can give you my thoughts for what they're worth. All right. Monthly chart, holding support. I got no problem here. We're off the highs, but it's only the 10th. Weekly chart. What's your strike on the Tesla puts? I like the 265.18 mark. You're okay, Mike. You're all right. So, gotcha. I'll be purchasing a put and looking to sell when it goes down. Gotcha. Okay. So you're long put buyer. Okay. Gotcha. Yeah, and you even followed up there. Okay. Now I understand. You know, so here's my I'm gonna give you my feedback on the purchasing of a put option, or for that matter, a call option. You got to have an edge because that time decay works against you. So um, I would ask what that edge is, and you have a strike of 780. Where do we close? So you're in the money put buyer. Oh no, we close. All right, so you're an at the money put buyer. You know, yeah, we had a down week last week, but it wasn't horrific. Volume was not that high. We're going to go to seasonality in a moment. You're in a trading range, Mike. I'll share this chart with you so you have it. You're gonna, so basically what your bet is really, I don't like the trade, if that matters to you, and I'll share the reasons why. Unless you're doing a scalp, I think that there's a very strong probability that we are going to test 780. I think it's improbable that we are going to break 780. Why? The reason is this. I'm going to take the trend lines off. Again, I got to pay the bills here. So I'm going to, for those folks just joining in, we're using TrendSpider Automated Technical Analysis. Use the link below on YouTube and the Linktree link above to go over to their website. Use discount code 35CON, discount code 35CON. I always get it wrong. Okay, back to the chart. We're using automated trend lines here. So I'm going to take them off. Let's take the drawings off to clean this up. We're just going to use purely the automated trend lines. There you have it. There's your rising upper band of support. You need to have a reason as to why that's going to break support. If you're going to scalp it, if your bet is that you're going to wait until it rallies up until this upper band of resistance and you're going to trade it back down to the lower band of support, okay, I could go with that. I would probably wait until it hits that resistance level and probably go with an at the money call out or put option then. I wouldn't buy the 780s now. At this point, you're right in the middle of a trading range. The bias is to the upside. We're contrarians, but we respect the trend, right? A lot of guys say the contrarians, but the contrarians just to be wrong. I mean, if the trend is normally right, then why do you want to be intentionally wrong? So I think that the probability of you making money on that trade, it's possible, but you're not going to make a lot on it. And there's a good chance that if it rallies, you're going to lose money on the time decay. And by the time it does hit 780, the time decay will have evaporated the value of that option so long that it's not worth the trade. You could still lose money even if it hits 780. And you got to hope that it breaks 780. You got to have a why as to why it may break 780. So if you're looking at it from an earnings trade, I would look to open up a strangle on it. And that would be, I would sell the premium. And I did it last quarter on Tesla. I'll do it again this quarter as well, is sell the premium. Go deep out of the money to the call side, deep out of the money to the put side, bring in cash flow. That way, no matter which way it goes, the decline the next day in implied volatility, you're banking, assuming that the shares don't collapse or don't skyrocket. It all depends upon where you set your strikes at. And that's what we do very, very well at the Contrarian Trader. So, my two thoughts, but I'm not seeing an edge here. If you have an edge, great. But I'm not seeing an edge here to make money on that trade. It's a very high risk trade, especially when you're buying those options. Let's go back to, it's almost 8 o'clock. Everyone's, what, 2 hours here. Let's go back to Mike. I hope that helped. Hey, Bob, thanks for going overtime. Seriously, my pleasure, Will. Anytime, man. My risk tolerance is low at the moment. Thanks, Bob. Need the contrarian mindset. Yeah, you know what? The hardest part about trading, and I was not born with it, patience, man. It's with me. I could have gone to, with the losses I incurred at the beginning until I learned patience. I could have gone to Harvard twice over. So, and I'm not proud of saying that. So, patience, my friend. Wait for your edge. Wait for your edge. Because there is a time and place for purchasing options. I prefer to sell them, but there's a time and place for purchasing options. By the way, Elon's option is supposed to expire in Q4. What was that all about? Right? She was hawking up Tesla. Was supposed to go to 5,000 a share a couple of months ago. Now she's dumping his shares. I don't think she's completely out of it. But what's up with that? You're right. 2,500 a share. 2025, right. What was up with that? Crazy. Tom Lou, Bob, do you believe about this Nasera thing? What is it? I don't even know about it. I'm gonna say I don't even know about it. What is Nasera? Hey, educate me. I've heard of it. I'm not up to date on it. I'm really not. I'm not the guy you want to ask. I would love to learn more. Let me know, please. All right. So circling back to the futures action, E-minis are now down about a half percentage point. This 4-hour bar has yet to close out. So I'm not willing quite yet to say that we have a breakdown here, but we are pretty close. Oh, so it's a new currency. You know, I don't keep up on these currencies. There's so many of them. I need to, I do read about them. They resonate me, a few of them, like Bitcoin has scale. XRP, that has real usage. Banks love it. So those are the two that I like because of scale and functionality. The other ones, I don't know about. Let's go on to the Russell, of which we are short. Wow. Good. Russell's now down over a half percentage point at key support. So what this tells me, first let's check out the Nasdaq. Nasdaq down over a half percentage point. Let's check out bond prices. Bond prices are down, but you could see on this 4-hour bar, They're putting up a defense. And I'm going to point this out as well. We may be getting higher lows. Way too early to make this call. We'll keep an eye on RSI. Let's see if we get a bullish reversal bar here. If bonds go positive, you maybe see the Nasdaq go positive tomorrow morning, because that means yields are pulling back. See what the dollar's doing. Yeah, I knew they had it wrong before. The dollar's now showing down only 0.5 cents and off the lows. This may go positive. Let's check out gold. Gold down. We're probably going to retest 17.50 the ounce. Silver down as well, just shy of a 0.5 percentage point. And I think that is about it, folks. My voice is about to go. Folks, thanks for joining in. Appreciate the Sunday night. Appreciate the time you spent, especially if you watch this whole thing. We went, what, an hour and 3/4? So thanks for being here. Smash the like button. Share with a friend. Don't forget TrendSpider, 35% discount code. Join us, the Contrarian Trader 14-day free trial offer. Get TrendSpider free. Everybody have a profitable trading week. Be well.